Streaming. All right, we are live. Okay. Show. All right. Okay. Before we begin, we should make sure everyone is here, or say people who are able to join us. Let's see. It's still private for some people. Wait, this is still. All right, I want to know if everyone is here. Maybe you can leave a comment or something. Wait, am I the only one watching this, or? Wait, what? Oh God. Now this link should have been there. How is it? Yeah, good. All right, good. It's good. People can join the live. All right, so we can begin any moment from now. I want everyone on Telegram to be informed before. Yeah, you don't have to completely describe me. I think I know how I look. All right, so yeah, I just have to let the people on Telegram know that we are here. And it's time to begin the live video. Live broadcast, I would say. But is this the one? Yes, it is. Okay. Alright, cool. Whiteboard. Yes. Exactly. Okay. All right, cool. Christian Kovasks. Yeah, I think that's you. I think I saw you on my TikTok live. You said you are Bulgarian. I remember. Mm-hmm. Christian Kovask. So yeah. Is he the only one in the? Mm-hmm. Pop-up chat. We have this down here. All right, cool. So we are here. Let's see how many people are now watching the live. We actually have only 3 people watching. Well, interesting. Started 9 minutes ago. Let's spell oh my god, that's difficult. That's difficult to pronounce. Kowatch. Well, it's difficult to pronounce here. All right. So, yeah. So, welcome to the live. We are going to begin by talking about. Yeah, we're going to begin by talking about a guy who lived in Japan some time ago. Well, it may be like 200 years ago. So, yeah, it's a really um, distant time from now. So, this guy, he lived. He was I would say a farmer, a rice seller. He was selling rice, so he must have been farming rice. And yeah, so I would love that you leave your comments in the comment section if you have any questions whatsoever as I continue. Yeah, so this guy, he was a rice seller, and he would sell rice as a normal rice seller. Now he noticed that there were patterns in the markets. Like people would sell at some time massively, and you know want to buy. Yeah, yeah. Okay, and some people would prefer buying more at some seasons. So this was very reoccurring in a way that he started to, put this into like patterns, because he noticed a reoccurrence of buyers coming in and buying more at some times, and sellers coming in and only selling less at some times. So there is always this idea of greed and fear in the markets. So buying and selling has to do a lot with greed and fear. You may want to buy now, but you are afraid that perhaps you'd buy, but tomorrow you would not be able to sell it. So you will have that fear of buying now. You may want to wait until you can only maybe you can only buy tomorrow, so that you would have known what would have happened before you bought. So this is a series of things that he noticed in the market, and he actually outsmarted everyone who was in the market at that time, because no one was, like stopping to be like, oh, what is going on? Perhaps we should do it this way. So this was this guy's thesis, and his name was, and he still is, I don't know, but he's dead. His name was Hama Monayisa. So the Japanese candlesticks come from this guy. The idea of the Japanese candlesticks is to, he basically noticed these patterns, and he began to, put them into signs. So these signs reminded him of what is to happen. Yeah. We are going right into that now. I don't know why we have very few people in the watching the video. Perhaps I should let people know. On it's only 4, so we have more people, but yeah, you're going to learn all of that, and we're going to talk a lot about that. But it all starts with this, and a lot of people were so excited to to learn from scratch. So we are actually taking this from scratch. Basically, this is from scratch. Where are the rest of the people? Couldn't comment before. All right, now you are here. That's good. Oh, You had not created a channel. Cool. Yeah, it's good. It's good that we do not have only one person here. Maybe those already have basic knowledge on all of this. Us, the newbies, are the excited ones. Well, I actually like newbies. Yeah, I like people who don't have a clue. It's sort of a challenge to me, to make people understand. That's why the channel and all of this is understanding crypto. It's all about, you know taking someone from absolute zero to expert. Because even I've just been trading for like 6 years. But I got some people who've been trading for 20 years. Yeah, 20 years, and they still, they are like, wow, when I make some predictions and they come to pass anyway. So yeah, I like taking people from absolute zero to a lot, to expert in this. All right, so we were just talking about Homa Monayisa. He's the founder of Japanese candlesticks. He noticed trends and patterns in the markets, and he decided to mark these trends and patterns with candlesticks. So the candlesticks are just shapes that talk about what the shapes of the candlesticks seek to do is to give us information on how market sentiment is. All right, Jones. Yeah, you'll be glad. That's cool. Yeah. So all what you see in the charts is a representation of how people feel in the markets. I always emphasize on people. It's people, not just price. People see it as price. When you are looking at the chart, you are like, no, the price is at this. It is market sentiment. It is how people feel. That price allocation there is not just a figure. It's how people feel. All right, so we are going to start with a simple candlestick. And this is pretty exciting even for me because, I did this before on the channel, but it was not live, so I couldn't, tell if anyone is understanding what I'm saying or not. So even for this is exciting. So we have a candle like so. Anyway, before, if you were not here before, this was Homa Monayisa. Oops, I'm late. Hey guys. Hello, Pat S. Yeah, we just talked about Japanese candlesticks. We talked about a guy who lived in Japan about 200 years ago. He noticed patterns in the markets. He was a rice seller and he noticed patterns. So he decided to, basically form a code language that will explain to him what market sentiment is. Now, this guy noticed patterns. It's always important to remember that he noticed patterns, and these patterns were reoccurrent. They would occur today and perhaps next month. The same pattern that occurred last month will occur again. Why will that happen? Because the one that occurred previous to the let's say A occurred, then B occurred. Next month he sees A, so he would expect B. So it's a series of patterns that when they happen together, that will make him expect something else. All right, and we are saying here that the candlesticks and price that you see on the charts, that's not just price, but it is actually market sentiment. It is actually what people feel, how people feel about the future. And we will come to that in a minute. So the candlesticks he drew, now these names will be English names. They are not Japanese because, of course, I do not speak Japanese. The names of the candlestick will start with a basic candlestick, and this will be like so. So we have a green candlestick like so. Yeah. Now what is happening on this candle? When you see a green candle like so, what is happening? So I will explain it, and I will tell you exactly how the Homa Mona Lisa guy saw this. Now when he saw that people came into the market, and there was higher buying pressure, like people were willing to buy more than like people were more willing to buy than to sell, he would draw a candlestick that looked like so. All right, so people came into the market, started buying here. Yeah, they started buying here. Now maybe I should put that in black so that it gets a bit, that looks a bit different. All right, so people came into the market and they started buying. Let's say this is me. All right, so I have my eyes here. Yeah, that does look like me. All right, so I come into the markets, yeah, and I start buying here. Now let's say this is a commodity like say rice, and I am buying, yeah, let's put it at rice, let's keep it at rice. So I am buying from here. I hope everyone is in understanding up till now. I am buying from here. So this is the open of the market. Yeah, this zone right here, this is the open of the market, this zone here. And here, let's say as I buy, a lot of other people are like, maybe this thing is really too valuable, so everyone jumps in and everyone is buying. What happens to the price of that thing? The price increases. Now you have to understand that price is determined by buyers, not sellers. Buyers determine price. Price is how much a person is willing to buy anything. That is the price of that thing, not how much people are willing to sell. Price is how much people are willing to buy. That's the price of the thing. You could have, say, a keyboard like this one, and you want to sell it for $1 million. Well, no one is going to buy it for $1 million. But if someone wants to buy it for, say, $100, which is about the same price of this keyboard, and you are willing to sell it for that much, well, if you are not willing to sell it and everyone is offering $100 and you don't want to sell it, it simply means you will never sell it. So if you really want to sell it, you must come down to the price at which the average person, or say most people, are willing to buy it for, the price at which you will find someone who can buy it. So the price is generally determined by the buyer. All right, so I come to the market and I start to buy here, and let's say it's here, it is $1. Okay, so as I buy at $1, my friend, someone here, also sees me buy. And what happens here? He also wants to buy, because he's like, oh, so maybe this thing is really good, maybe we should jump in and buy. So he also buys, and as sellers see that people are a lot more interested in this commodity, they put up the price. And the more the price goes up, let's say as they put up the price, no one is like, no, it's too expensive now. People are willing to buy even at higher rates. What will happen is the price will keep on increasing until people don't want to buy it at a higher price anymore. So that is where this we will have this price will close here. All right, so let's say the market started here at about we say the daily open. So this here, I was willing to buy it here for $1, and this is a daily, on the daily. So this is the first day of the market. It opened here I was willing to buy it at $1, and we had other people who came in and they also wanted to buy, and let's say the supply does not increase, so the supply of this commodity does not increase, of our rice. Yeah, it does not increase, the supply remains the same, and more people want to buy it. Of course, every seller will know that these people really like this commodity, so let's increase the price and see how they will react. As they increase the price, people still want to buy, so the price just keeps going up until people will no longer want to buy at a higher. Yeah, you can watch it later. This will be here on YouTube for you to watch, so long as you have the link. So yeah, so people are willing to buy at a higher rate. That's how the price continues to increase. Now let's say the day closes here, so let's say this is at let's say 8 a.m. Yeah, 8 a.m. and let's put this, no, let's say 4 a.m. 4 a.m. 4. All right, to 4 p.m. Yeah. All right, cool. So yeah, so we have here, I started to buy here. A lot of other people, they get excited. Everyone is buying. Everyone is buying. Everyone is buying. The price continues to go up until here. Let's say this is on the daily. Yeah, so the market started here today at 4 a.m. to here at 4 p.m. Yeah, now what will happen here is the price will close here. Let's say the price closes here at $10. Yeah, so the price closed here on this day at $10. So this is the price at which people were willing to buy the rice. I don't know, maybe a bag of rice or a kilogram, I don't know. So let's just say they were willing to buy this at $10, and it started at $1. Yeah, I think so far so good. Now this is what happened on this day. This will give us, what will this give us? This will give us, I will correct this here, no, all right, that will give us a bullish candle. That will give us a bullish candle that looks like so. For that day. So on this one day, there were more buyers. So this was the candle for this day. There were more people willing to buy than people willing to sell. In fact, this candle tells us that majority of people on this day were only willing to buy than sell. That's what this candle tells us, because the day started here. Because the day started here, we said the day starts here and ends here, so it went up, so price went up. So the day started here, went up. Yeah, so far so good. Good. Went up and ended here at 4. So from 4 a.m. to 4 p.m. people were only buying. You could see this with Dogecoin, Shiba Inu. You know, when they start pumping, they just continuously go up. They don't stop. I mean, Bitcoin even maybe dumps on that day and they don't stop. They just continue going up. They just want to go up. You can see this with coins like that. And even with Bitcoin, on some days you will see the same thing. So the price started here and goes up until here and closes here on this day. All right, so this day one can be represented like so: a bullish candle. This is a bullish candle. It tells us that people came in here, the price went up because people were only buying, and it closed here on this day. Now, this is the body of the candle. This is the body of the candle. Let's say that on the next day, instead of people wanting to say buy, they start selling. What will happen to the price if people came here on the next day and they started to sell? So day one, we had something like so. We had day one looking like so. So day one day. So the D here stands for day, and so this is day one. Now let's say on the second day, day one. On the second day, instead of people continuing to buy from here, so the price closed here at 4 p.m. this day. Yeah, it closed here. Instead of people starting to buy, because if they start to buy here, the price will continue to go up from here. So prices start here. This is the open of this selling day. This is the close of the selling day. So we have open here and close here. All right. Now I could as well start by telling you about candlesticks, bodies, wicks, but I think that's a bit confusing for many people. So I've taken this, in a very, very different route, I would say. Most people wouldn't explain it like this. So on the second day, if prices just started going up, here is what will happen. The price will continuously go up like so. So we have day one, where people come and just buy from the open of the day, from down here to the close of the day. So when price is moving up, people are buying. When it's moving down, people are selling. So this is the open of day two. This is day two. This one here is day two. Now we have two here, day two. All right. Now, all right. So this is the second day. This is the first day. Now note that every candle here represents one day, a complete day. Okay. So the candle itself means how people bought and sold on one day. So it's price action for one day. So we can say daily, one daily here. This is also one daily here, but this is day one and this is day two. All right, so what happens in day two? People come, instead of just buying, because if they bought, prices will just go up like so. Instead of just buying, what do? They start to sell instead. So let's say they realized profits, a lot of profits that previous day. They start to sell. So they will start selling here. They start selling from the close of day one. So this is the open of the first day. Everyone bought. The prices went up. It closed here. But here, instead of buying, people were selling. So if we have something that looks like so, so instead of buying, people were selling. So when they start to sell, prices start to come to the downside like so. Okay, so we have two candles here. We have two candles. One candle where people actually are just buying. One where people are just selling. So this is where you begin to understand that candlesticks actually tell us about, market sentiment, what people are actually doing. It's not just, random candles on a chart. It's really what people are doing. And that's what a lot of people don't understand. That's why I get comments in my videos be like, you draw, stupid lines on your charts and think price will follow these lines. No, price is not following my lines. It is following market sentiment. It is following how people feel about the future, because this that you are looking at here is how people are actually feeling. If you think that what you bought yesterday, let's say people who bought here, we have the green candle where people bought a lot. We have the red candle, meaning that people are selling a lot. So what are these candles telling us? This day one candle is telling us that people here were optimistic. Yeah, people here were optimistic about the future. They knew that the price of this thing that I am buying may cost more later. So they were buying so that they can sell at a profit. Let's just say you were buying, say, Bitcoin, for example. Let's go straight to crypto. You were buying Bitcoin here, and the next day, the price closed here, and the next day here, some horrible news came out. Like maybe Satoshi Nakamoto came out and he wanted to sell, all of his Bitcoins. He has about 1 million Bitcoins. A lot of people will start to sell because they anticipate that when Satoshi Nakamoto starts to sell his Bitcoins, the price will go to the downside. It will crash, basically. So they'll start to sell here. So you will have two candles here that indicates how people felt yesterday on the first day. That's why they bought a lot. And the other candle is telling you how people feel today, and that's why they are selling a lot. Now, all of this can be grouped into candlesticks. So you begin to understand now that candlesticks actually tell us a lot of information on what is actually going on in the markets. Now, so let's go into the types of candlesticks that you will find and what they actually mean. I hope up till now everyone is in shape for this. How many people are watching? Let me see. All right, we got 10 people watching. We got 10 people. All right, so we have, all right, let's go to a different page so that you begin to understand where wicks even come from. It may be funny, but some people usually ask me, where did the wick come from? Like, what does the wick mean? So we are going to look at that now. Let's say people started buying somewhere here. Price went up, and for some reason they decided to start selling. What will you see? You will see a red candle forming here, and it will start to come to the downside. You will see a wick up here, because remember, this is not just green, it's like fully green, like so. Yeah, that's how your normal candles will look like. So when price goes up and it starts to come down, you will see a wick here. Now this wick is there to give you information about what's actually going on, like how far people bought. If there were no wicks, you will have very little information on what is actually going on in the markets. So you can think about you can think of a marketplace as, a tug of war, basically. Buyers and sellers basically competing to pull each other to the other side, if you know what I mean. So you will see that Buyers come in, the buy, sellers come in, the sell. Sometimes even the buyers can be sellers, and sometimes even the sellers can be buyers. So you just need to buy a lot, and perhaps you are in so much profit, you decide to sell. When you start to sell, and when say a lot of people start to sell, you will find these wicks like so. Now remember, as in our other slide, we were talking about the open and the close of the day. So the open of this day will be here, and let's say this is all still in day 1. This is all happening within the same day, like it's still happening in the same day. Price went up and it started to come to the downside. It will leave a wick to the upside of the upside. So if it went up until here, and it starts to come to the downside, it will leave a wick to the upside of the remaining candle. And when it reaches the open of the day here, it will have a red body like so. It will start having a red body. Oh my god, I'm so bad at drawing and stuff. Yeah, so this gives us info. This gives us, and let's say price closes here. Let's say price closes here. This is, so this is the close. All right, so this is the close of this day. So cumulatively, this candle can be seen like so. It will now be seen like so. It will not be seen like this that you see here. It will not be seen like this. So all of this that happened in this day will be seen as a single candle that looks like so. So yeah, it will be seen like so. All right. Okay, so it will be seen like so. So when you see a candle like this, immediately you can know what happened here. Now, I will not stress much on the names of these candles. That's not really important. The names of the candles are, even names of patterns are really not important. Believe me, you will just know them automatically. I just need to give you like a picture, and you can even cram the names if you want. But you need to understand market sentiment. You need to understand what the candles actually mean, what the patterns mean. It's not about their names, it's about the patterns, the meaning behind these candles. So this candle is telling us that the markets started here. This was the open. So this is daily open. So the 1 day open, yeah, this was the daily open. This candle opened here. Because we have a wick to the upside, it means that price went up, then started going back down, and continued, went through this open, so it continued to the downside from this open and formed a body to the downside. So you can easily understand here that buyers came in here, but as they continued to buy, price went to the upside. And then what happened? Sellers stepped in, or the same buyers. Let's say you, for example, you buy Dogecoin, for example, and you bought Dogecoin, I bought Dogecoin, everyone bought Dogecoin, and say Elon Musk, for example, tweets that perhaps Dogecoin is some shitty coin, it will never make it will never go anywhere. What will be your reaction? You will sell. I will sell. So if we sell, most people will sell. What will happen? The price went up. So as it starts to go to the downside, it will, of course, come right down until wherever people feel like they can start buying in more. That's where the price is going to stop. So it does not just stop automatically. It's going to stop where people will be willing to buy it at that price. So if it comes here and it does not stop, it means that no one is willing to buy it here, or say little to no one is willing to buy here. So it will continue to go lower until people are willing to buy at that price. So when you understand this, you begin to see the relationship between price and market sentiment. It's not just some crazy number on your screen. It's actually telling you that people are willing to pay this amount for this asset, at this current market evaluation. So that is exactly what is going on here. We started the daily here, went up here, so it goes up because people are willing to buy. It comes down until here because people will be willing to buy only here. So even right down as it's coming down here, no one was willing to buy, so it continues to go to the downside. When it reaches here, or even anywhere down here, perhaps people are willing to buy. So I don't know if you guys are seeing me. Is everything okay by now? Is everyone in understanding? I want to know if all right. Okay. Okay, cool. So basically, getting my head around. Well, if you do not understand anything, just let me know. This is that's the good thing about having this live. If you were just watching a video, that would be a problem because you may not understand something and you cannot ask. Watching a video is like listening to the radio, so you cannot ask what you do not understand. You may leave a comment, but do that even work with some people? So yeah, if you don't understand anything, just let me know so that I can talk more about it. All right, all good. Okay, so yeah, okay, I will, but so far all good. All right, cool. Now, so that's what we are basically looking at here. People came in the bot until it went up to here. So when you see a candle that looks like this, that is what that candle is trying to tell you. Yeah. All right, so people came in here at the open, the bot price reached people were still willing to buy even when it was somewhere here. When it went up to here, a lot of people were willing to sell, and so the price started to come down until here. Okay, so now when the price came right down to here, some people were willing to buy, so the price stopped here. Now on this particular candle, the daily candle closed here, so it actually closed and we did not have any wick to the downside, and I will explain that in a bit. So we have 1 day here and we have close. Okay, so we have the daily candle closes here, and so that is the information that this candle is telling us. Yes. Now let's go to another slide. So let's say from the daily candle we just had was the inverted hammer. Okay, now so as we explained, buyers came in here, rushed up with the price, they came in here, the bought until here, seller stepped in and started to sell. So the price opened here and closed here. Now for the next day, let's say people come in and they are more optimistic about the future. What they would do is they will buy. So as they start to buy, the price starts here and starts to go up until here. Let's say when they reach here, a lot of people start to be more skeptical. They don't want to, they are afraid that if it goes right up to here, perhaps they may not be able to sell, so they start selling here. When they start to sell, what structure will you see? You will see something that looks like so. You will see another red wick that looks like so. When it comes here, because this now is the open of this candle, so you have the idea, you have the principle that price has to start on the open where the other candle closed. So the open here was here, so this was the open. We have an O here, we have open and close. So the next candle has to start where this previous candle of the 1 day here closed. So this next candle on the second day has to start where this the previous candle closed. So on this candle, this will be its open, and its close has not yet been, we don't know its close yet. Now we are saying that the price went up until here, and this actually went maybe up until here. Now remember this, I want you all watching this right now to remember this. I will explain to you maybe sometime in the future why price will want to retrace half of this candle. All right, so this is the middle part. This is 50% of the previous candle. So we have 50% here. Now this is a bit more advanced. Sometime in the future I will explain to you why it will go up 50% of the previous candle. I will explain this to you, and it's extremely important. But for now, know that, because if I have to explain that to you now, then I must talk about Fibonacci, and that's a whole other ball game, I think. So yeah, price starts from here, which is the close of the previous candle. It starts from that close, it goes up to 50% of the previous candle. It may not, but most of the times it might. You can look this out for yourself on the charts. It always goes 50% of the previous candle. If it does not, it will go there sometime in the future. It must go 50% of this candle that it dumped by. So yeah, it may not happen immediately, but it will surely do that sometime in the future. So it came back to this open, because this is its own open, and it started to go to the downside like so, and it continued down till here. Now let's say people here, around here, we have a lot of optimistic people who really think, no, this cannot be worth this less, maybe we should start to buy. And the start to buy somewhere around here. What do you think will happen to the price? The price will now shift and start to go back up. When it starts to go back up, this will happen. You'll see price going back up like so. As it's going back up, what will happen to this candle right here? Let's say it goes back up, and as we said before, the candle starts here at 4 a.m. and closes at 4. The candle starts here at, this is open, so this is 4 a.m. open and close here at 4 p.m. Close. Now the 4 a.m. and 4 p.m. is just an example. So it starts here at 4 a.m. and close here at 4 p.m. So here it opened at 4 a.m. and it went up because people were buying, but as they got skeptical and they started to sell, what will happen? It will leave a wick behind and it starts to go to the downside when it crosses this line right here, because up until here it was still green, like so. Let's just give this example from here. So as it started here, it started to go up like so. This is price going up. When it starts to come to the downside, please just let me know if there is anything you do not understand. Let me know in the comments so that we are all in understanding as we go ahead. It might be a bit simple now, but as you go into more advanced stuff, you will have to know this. So this is like the foundation of everything I know. You really need to know this if you maybe want to make crazy predictions. So price started here at open, yeah, and it is going to the upside. Let's say you got skeptical, you know that, oh, this is going to go down, maybe I should start selling. Everyone wants to sell. What happens to the price? Price starts to go to the downside. Price starts to go to the downside, and as it goes to the downside, it leaves a wick. Now that wick will not be green, will not be red immediately. It will be like so, yeah. It only becomes red when it crosses this line here, when it crosses the daily open here. All right, so this was the open. When it crosses this open here to the downside, this wick will turn into red like this one. So it is really about a tug of war, as I told you before. People are on one side like so, the other people are here. These are buyers, these are sellers. Buyers pulling sellers. This is my rope, yeah. So this guy is pulling from here and this guy is pulling from here. You have other guys like so, all pulling. So this is the simplest way to see it. You have buyers pulling to this side and you have sellers pulling to this side. You have the line here. You have the line here. This blue line is the open that I indicated here. As buyers, as sellers, because sellers are to the downside, when they successfully pull price to them, this entire candle and the wick will turn red. When buyers successfully pull price to their side, which is to the upside, the price, the candle will turn green. So it works the same with a candle that was going to, maybe sellers were winning at first, then buyers start to win. The candle will turn green when the price goes up from here. So at this open, when the price goes up, if sellers were winning and the price goes up finally, when buyers start to win, the wick will be green. So in that case, the wick will look like so. It will look like so, which is an inverse to this candle. Yeah, so this is the hammer, this is the inverted hammer. So this is what these candles are trying to tell us. People are basically fighting to buy and sell. So that is the information we are getting from these candles. Now, so far so good. So far, yes, all good. Getting my head around. Now, I hope we are good so far. I hope this is very clear so far as we proceed, because it might get a bit complicated now. Okay. All right. Now, Homa Mona Lisa saw all of this that we've been talking about. We've talked about the fact that candles basically now have two sides. We have buyers, we have sellers. We have wicks that tell us buyer behavior, because the wicks we've been talking about are showing us how people are feeling, how people feel about the future. If you have very long weeks, it means more sellers. If you have very short weeks, it means less sellers. So less people willing to buy. So if we see a structure, or if we see a candle that looks like so, with just one little wick here and one little wick here, it means that the candle opened here, closed here, because it's going up. Yeah. So we have open, we have close, we have wick to the downside, wick to the upside, but this is a very little wick, so it means that the candle opened here. I need to put that in black. The candle opened here, closed here. Now when it opened, sellers, people started to sell until here. Buyers stepped in, pushed the price right to the upside, and they pushed the price up till here. Yeah, and the price came back down here. So we have this. That's what gives us this structure, this candlestick. So this candlestick comes from that action. It comes from people entering here at the open, and sellers sell to here, but buyers buy up till here. Yeah, when they buy up till here, and maybe some of them decide to sell, but more are still willing to buy, the price comes only until here. Now remember that it can still continue, and and you have something that looks like so, and it continues to the upside, and the candle goes up to look like so. But this simply tells us that there is a lot of bullish momentum in the market. Now, Homa Mona Lisa saw all of this, and he decided to code candlesticks, naming them relative to the reoccurrence of patterns in the markets. So he would combine one candle with another one to describe a certain behavior in the markets, to describe a certain buyer and seller behavior. So that brought us to engulfing patterns, to engulfing candles. Now let's say, for example, if you have noticed, I'm teaching this stuff on the basis of understanding it. It's not about knowing the names of candles. Knowing all names of candles will not help you. It's about understanding what's actually going on in a single candle. It's all about really understanding it. If you are looking at candles from the basis of just, naming it, it will not help you, because candlesticks tell you a story in the markets, how people actually feel. Candles, that's why when I make a prediction and I'm like, what is going to happen, I have a prediction for $90 ETH. So I think Ethereum could be one day worth $90. I don't understand how that could happen, but the charts indicate that it could go there. It could go to $90. I am more optimistic about $300. But $90, I know it's really, really small. But I ask myself, what is going to happen? Because this is actually what I am reading from the charts, and this is what I think is the market sentiment. So what is going to happen? All what you see happening in the news, everything is represented in the charts, but people are so adamant to read it in the way it's written. You have to read it without any emotions. If you read the charts and know from it that Bitcoin is going to zero, then your question should be, what will happen to push it to that price? It shouldn't be, this can't happen, the charts can't tell me everything. No, the charts are actually telling you what people think. It's not telling you price. It's not telling you to buy or sell. It's telling you how people feel about the future. If I came into the market and I have maybe say 20% of all Bitcoin in circulation and I sold all of it, it will crash the price a lot in one single candle. And so someone who is reading that chart can look at this candle and be like, this was very high volume and at this single time, so what was going on here? Who was selling so much? What actually is going on? Now remember that what you are looking in the charts is not what is actually happening at the moment. It's what people feel that will happen in the future. That's why they would say it's priced in, because the charts are basically a representation of human feeling. How you feel about the future, how optimistic you are about the future is what we read on the charts. It's not present, it's future. If Elon Musk says something about Dogecoin, why will you be buying? Well, you would say that you just buy because you think the price is going to go up, but why would it go up? So you are buying. The act of you buying with other people increases the price. Why? Because you feel that it will go up. You feel that what he said has a lot of hype and it will go up. So if I read the charts, I can know that that was your feeling at the moment when that price was going up. You felt like it's going to go up, that's why you were buying. So when price is going up, it's actually this feeling. Now later on we will talk more about when we'll be talking about market makers, then you will see why you might see all of this on the charts, and the charts do not follow what you are looking at. That we will talk about when we'll be talking about liquidity. All right, so far so good. Who is still watching right now? Let's see who is there. We have how many watching? 11 people. How many are there? We have 8. Well, this might be night for some people, so I understand. Yeah, so who is still there? If you are here and you have any questions, so let me know so that we continue. Okay, so we have Homa Monaisa noticed. Okay, good. All right, yeah, just let me know as you understand. Just let me know so that I don't just sit here and talk to myself or something. 1 a.m. All right. Oh wow, that's late. All right, so yeah, so let's talk about candlestick, patterns with candlesticks. So since we now understand them, so we are all about understanding candlesticks here. If I was to really talk on all candlesticks, that will just take a lot of time and you will never finish this topic any day from now. So yeah, but I have a video about this on my I think it's Complete Beginner's Guide to Technical Analysis on the channel. I think I have a video on this. Yeah, I made a video on this, and all of this that I'm talking about, the types of candlesticks and stuff, I talked about them here on the channel. So if you really want to learn only about candlesticks, you may go there. What we're trying to do here is understand yeah, understand how the markets work and how to read candlesticks. Not just learn their names, that's not really important. Learning candlestick names, that's not important. Okay, all right, cool. Okay, so we have the most commonly known bullish engulfing candlestick. Yeah, and as I was explaining from this, I think that was 6, no, slide 5. Yeah, so here we have the buyers, here we have the sellers. So you can see them like so. We have basically we have people who are buying and people who are selling. The more buyers we have, here, that's the more they will pull, sellers to their side. So overall on this day it will be bullish. The more sellers we have, overall they will pull buyers to their side. So on this day it will be bearish. So bullish will just be represented by blue and bearish will be represented by red. That's the standard way anyway, because your charts may have different colors. Okay, so if we now go to the bullish engulfing candlestick, what is actually going on in a bullish engulfing candlestick? If you see a candle like so, and this is again Homa Mona Lisa's thing. So we have a bearish candlestick like that one, and we have a bullish candlestick like this one. Yeah, like this one. Okay, so let's explain what this means. Yeah, we know that the open or the start of a bearish candle is the top of it. Yes, so it's the top of the body that is the start of that candle. Okay, so the top is here. This is our 4 a.m. the 4 a.m. start we were talking about earlier, and this is the 4 p.m. close. Yes, now this on the bullish side, on this is on the, say, the next candle. Now these candles can be on any time frame, and time frame is just say the time, the price action time. So this can be in 5 minutes. This can, if this is 5 minutes, then this is obviously 5 minutes, so it means 5 minutes of price action. If this is the daily time frame, when I say the daily time frame, the 3-day time frame, it simply means every candle here represents 3 days of price action. If this is the 4-hourly time frame, it simply means every candle here represents 4 hours of price action. A 1-hourly time frame, 1 hour of price action. So let's say this is on the 1 hour time frame. The start of this candle is this one right here. So it starts here. Now when it starts, it goes to the upside. So we are basically reading what these candles are telling us here. So that's what we are about. We don't really care about the name. This, by the way, is a bullish engulfing pattern, but we don't care about that. What we want to know is what this is telling us. It's the understanding behind reading candles that, makes you predict price. It's not just the name. The name really does not mean anything. It's the understanding. Okay, so let's say the candle starts here and ends, the candlestick starts here. So this is the open and this is the close for this candle on the 1 hour time frame. Okay, so it opens here and goes up until here, and as it starts to go down, as we said before, the wick will not be red until it crosses the open right here. So when it crosses this open and starts to go to the downside like so, the wick will now be red. So when it goes to the downside, it will be red. And on this candle, the price went down until here, until this wick here, then it went back up to here, and we had our close. I hope this is really understood by everyone. Okay, and we had our close here. Now, what is happening on the next candle? On the next candle, the open is here. As we said before, the open of the next candle is where the previous candle closed. So the previous candle closed here, the open of this candle will be here. Yes? Okay, so it opened here, and based on the information that this candle is telling us, this price action went to the downside at first, down to here where we see the wick, and until it crossed above this open here, this candle was still red. So at first this candle looks like so. It opened with a red like so, went down, yes, but until it crossed above this open here, the entire candle started looking like so. So it started looking like so, then it started to go to the upside like so. All right, so that is exactly what happened here. That's exactly what happened here. It started to go to the upside, and we have the candle like so. And when it went up here, it some people started to sell, so it came back down here and closed here. Now let's put that in black. All right, so we have our close like so. Now, according to Hamamona Yusa, this is a bullish engulfing candle. This candle, the engulfing candle, this type of candlestick formation tells us that sellers came into the markets. People came in only wanting to sell, but they started to sell. People came in only wanting to sell, but some people started buying up till here. They were not optimistic, and so they started to sell right down to here, actually right down to here. But some people started to buy right up to here where we have the close here. Yeah, I think I'm really explaining this in a way that a 5-year-old can understand. So what's going on the next hour, because this is on the 1 hourly time frame. It can also be the daily. We can just call it daily or 1 hourly, any time frame you might pick. So on the next candle, so this is candle 1, this is candle 2. On the next candle, what happened? People started, because this is the open. Yes, the open of a candle is where the close of the previous candle was. So this was the close, this will be the open. It opens where the previous candle closed. So it opened here, and price started to go to the downside down till here. But what happened? A lot of people started to buy. A lot more people who were not willing to buy even here continued to buy until price reached here. So the bullish engulfing candlestick pattern is describing or telling us that there are more active buyers in the markets. So price is much more likely to continue going to the upside. That's what a bullish engulfing pattern is telling us. So what we would expect for to happen in the next region here, all right, so what we would expect to happen in the next region here, 1, 2, what we would expect to happen here is that price continues to go to the upside like so. We may have a week up here, but this is what we would expect. Maybe the price will come down a bit like so, but what we normally expect is price goes to the upside from this close here. So it may retrace down like so, and it still continues going to the upside. Now, so this is our bullish engulfing pattern. Yeah, and we have price continuation to the upside after that engulfing pattern, telling us that there are more buyers in the market, and there is a very high likelihood that you will still continue to see, a lot more candles forming to the upside here. Yeah, you will continue to see a lot more candles forming like so. So this is a bullish engulfing candlestick pattern. Let's go to the bearish case. So like so. So the bearish case will simply just be an inverse of the bullish engulfing. We would see price start like so. Maybe price maybe starts like so. So price, the open was here, or maybe I should just draw that in the other. No, yeah, I'll just draw this here so that in the next slide I will put something that looks that can combine the two. So we have price starting here. Yeah, so we have price starting here, goes up, have some resistance here, and comes back here and closes down here. So all right, on the next candle, what do we have? We have to take from the close of this candle. So we have price that started from here. So this was the open, yes, open here, close here. So price started here, went up, and closed here. Now, on the next candle, we have more people who want to sell instead. So price opens here, and perhaps it could open, and we have some people buying still. So it opens, and it's still going to the upside like so. Until people, the same people. Now keep in mind, this may not really be different people. It can still just be the same people. You bought and you want to sell, so you start selling, you become a seller. So you bought earlier, you were a buyer, and you just become a seller. So it does not really mean you have to there are some special people who come in to sell. It may as well just be the same person buying and selling to other people. You can be a buyer and soon you become a seller. It's not really a big deal here. So let's go faster. So you open here, and the price goes up, close here. Now we said it went up, but a lot more people started to sell instead. So as we explained earlier, it comes down and leaves a wick behind, and price plunges like so. This now, ladies and gentlemen, will be a bearish engulfing pattern. Bearish engulfing pattern, which means that sellers have they have won the tug of war we were talking about earlier. The tug of war has been won by sellers in this case. So here is where we'll expect price continuing to go to the downside. So what we would expect to see here would be price going like so. It could retrace, as we said, like on the buying end, it could retrace up till here, but because this was the close of this candle, open, close, yes, it opened here, closed here. So price has to start from the close of the previous candle, and it went up. The wick that tells us that it went up first, and then it started going to the downside. The wick here tells us that it went down here first, then went back up and closed here. So the next candle starts from the close of the previous candle, and we have this one. The wick here tells us that people bought and they sold. If you do not see a wick here at the close, it means that the selling pressure that is here from here is still a lot more here. So you may see a very big, body. You may see a very big body going to the downside like so. Still, you may see a very big body going down like so. And that's exactly what happens in the marketplace. So you can combine the two. If you combine the two, they will look like so. They will look like, where is the other one? Okay. So you can combine the two to look like so. You have bullish engulfing pattern leads to a pump, bullish engulfing pattern. Nope. Bullish engulfing pattern that starts with a spinning top. Now the name of this candle is a spinning top. I'm not really fond of just telling you the names. I am after the understanding behind candlesticks, not just the names. The names don't matter. You can just read the names off of Google. The names don't really matter. It's the meaning behind them that matters. So we have bullish engulfing pattern here. Price retraces down to here, continues to the upside like so. Let's say we don't have a wick here. We don't have any wick up here, which means people did not buy up to here and continue, maybe sold down. Yeah, this is gonna, this will be recorded, so if you want to go, it's fine. Yeah, you'll be able to watch it later. Yeah, it would. Okay, so we have price closing here without any wick to the upside. So what happens? We continue to go to the upside like so. Okay, and maybe we have a longer wick here. Now let's say here. Now I will just put the bearish engulfing pattern. I will put a bearish engulfing pattern scenario here. So we have, but I wanna just mix it up together so that it's a bit easier, and not too cumbersome for nothing. Okay, so let's say people bought. We have this bullish engulfing pattern here, showing us that buyers have overcome the sellers just by having this powerful bullish candle in front of a red spinning top. Now, so this spinning tops can be seen like a bit of indecision. When you do not see, not like I want to go yet, I just want to know if all right, yeah, it's cool. You have it here. You'll have it here. Yeah, you'll have it here. So if we see this to be this is a spinning top, okay? Spinning tops mean that we have little to no movement. It's kind of like a doji. So this is a doji. I have a video for just candlesticks, like what their names are. We are after understanding the meaning of candlesticks and what they really mean when we see them in the market. So a spinning top, as described in my other video for only candlesticks, shows that there is a bit of indecision in the markets. So we don't really have price moving too much to the upside, and we don't really have price moving too much to the downside. But we may have a red or green spinning top, which means people are not really too sure about buying, but they are buying than just selling. So we have the bias of we have a buying bias rather than a selling one. That's why we will have a green spinning top. But here we had more of a red, a selling bias. So the price was not really moving much, but people were more into selling than buying. This is the information that we get from here. But if we have a strong bullish candle after this spinning top, this is telling us that their mindset of just wanting to sell of not really deciding if they really want to just sell, but they are in the selling side of the spectrum, changed from selling into buying, which means this is confirming a very strong buying pressure. Now we'll talk more about this when we're talking about volumes. All right, so here we have this, which means price is most likely going to go to the upside because we have strong buyers coming in here and conquering the sellers, or say the people who were thinking of buying, but they are more into, they're more into selling. They're not really selling much because you're not seeing the candle just go down like so. It's not like the candle is like so. If you saw a candle like so, yeah, they really want to sell, like they are really selling. Everyone is selling when you see a candle like so. But now we have a candle that looks like so. So we just have a spinning top. Yes, they call these types of candles spinning tops. Now, so what is going on? We have people here wanting to, they are basically confused, I would say, but they are more into selling than buying. The green bullish candle here comes in, showing that buyers have overpowered the sellers and the prices are about to go to the upside like so. Yes, now when it reaches somewhere here, you could see something funny. You could see a morning star. That morning star, and we'll no need again for the names, but you could see a candle that looks like so. Yes, you could see a candle that looks like so. What is that candle telling us? You might be like, that's just a cross. Now let's explain what is going on here. This here means that we have price here on this candle. Yes, we have price. So we say candle 1, 2, what the hell? All right, 1, 2, 3, 4, and we have 5. All right, so what's going on? Candle 5, we went up here on candle 4, went up until here, but a lot of people started to sell. The sold and price came right down to here. Remember, this is the open of the candle, this is the close. Yes, this is the open here, this is the open, close, open, close, open, close, open, close. Good. Now, so we went right up to here and people started to sell until this close right here, but this right here was actually the open. Yes, this was actually the open. So no, this right here was actually the open, this here. So we would actually have it right down here. Let's just correct that for a minute. So we will have it right down here. Okay, so we have this. Let me draw it so that it's just uniform. Okay, now good. Now good. So we have the open here, we have the open, and we have the close on the same line. It could be a bit more different. It could be maybe like so, it could be like so, it could be a bit to the upside, but let's just put it there on the same line so that it's really clear that there is something going on. So this is just a doji. Yes, so you could just, the name of this type of candle is a doji. So what does this represent? What is this telling us? This is telling us that people bought from here on the open right to the close up here, right to the close up here, but they actually bought up till here. I would like that this should have the same level as the close here. So we have, yes, I would like to have that at the same level with the close. Okay, good. So they hit a point here where they were like, perhaps this is too expensive. Perhaps if I hold onto this, maybe no one will want to buy it at this price. Maybe I should start selling. So they started to sell right down to here, and you will easily see this at psychological zones of resistance. What do I mean by psychological zones of resistance? I'm talking about round figured numbers. If price leaves from $1 to somewhere around $5 is a psychological zone of resistance. You will easily see price stop somewhere around 5. If it goes more than 5, maybe you'll go 5.2 or 5.3, but you will easily see it stop somewhere around that region. So we have that psychological zone of resistance. Let's say that is what we are saying here. Yes. So price comes right back down to here. Let's say this was from 1 to 5 and price is somewhere around 4 here. It opened somewhere around here because that's the close of this one. But on this candle is telling us that it went to the downside. Yeah, it went to the downside. It can go to the downside and the upside and still come back to the same region. So let's just say that it went to the downside right here, went back up and came back to the same, around the same region where it opened here, but not to the downside because we still have a green candle. If it was more to the downside, then we will have a red doji that looks like so. Now we will come back to that, just to this type of doji in a second. So if we had a doji that looked like so, this will be telling us that there is indecision in the markets. They don't really know where to go. Buyers and sellers fighting, and they are basically on the same position. The market is not moving. That's what you can read as a doji. And pro tip for anyone who is watching this, what you can see even from patterns is that the psychology behind candlesticks apply even to, you know, bigger or larger scale price movements. So if, for example, I know a lot of you already know about bear flags and bull flags, but this video is engineered to, you know, help even someone who has no idea at all what this all means. Just a second here. So if we have this like so even in patterns, like in bigger, larger price movements, if you see a sudden drop like so, if you see a sudden price drop like so, and like so, yes, and this will not just be in a single candle, you can see something that looks like so. These are, let's say these are a lot of candles, yeah, and price dropping. If the price drops and goes into a consolidation phase that looks like so, you will call this a bear pennant, but this bear pennant is actually two figures telling you something. What this bear pennant is telling you is that you have a drop and a consolidation. Drop and consolidation. Maybe I should represent this by maybe a pump and a consolidation, since we're talking about price increase here. So all right, so we have a pump, so not in a single candle, of course. We have a pump like so and a consolidation like so. This is a bull pennant, yes. Okay, now what is this bull pennant telling us? This bull pennant is giving us similar information to what we see here. we see price rising because of the engulfing pattern here, and somewhere around here we have indecision on a doji candle. This doji candle can be represented by this consolidation here. Yes, and the candles that increase here can be represented by the upward price movement here. So it's basically the same psychology. Yeah, so we have indecision here, we have indecision here, so it's the same thing. Now what matters here is where price is most likely to go, and on a bull pennant the bias is that price is going to go to the upside, but here we need confirmation. But it's basically the same psychology. You have a pump, price increase, and we have a consolidation phase where there is indecision. It's the same thing here, but just because it's much more defined pattern, you could the bias that is bound to happen here. But if price closes down here, then for sure price may as well go like so. There is no guarantees around this. So let's say we have this indecision here, and the next candle turns out to be a red candle, so we have like so. Yes, we have like so. And let's say we have a wick to the upside, wick to the downside, like so. This right here will be a bearish engulfing pattern. Now bullish and bearish engulfing patterns, they are really better when the body of the next candle completely, why do we even call them bullish engulfing or bearish engulfing? It's because this body is engulfing the previous body. But I'm all about explaining what they mean here, so it's not really about the candlesticks, it's about the meaning, what they are actually trying to tell us, market psychology. Okay, so this right here will form a bearish engulfing pattern because this body right here, just that I'm not really drawing them like perfectly, but if you see this on the chart, you will see that this body right here, if it is a bearish engulfing pattern, it should engulf the body of the previous candle. And in this case, this candle did not really have a body, it just had 2 weeks basically. But anyway, this is considered to be the body of this candle because on a lower time frame this will have bodies. Yeah, if this is on the say daily time frame, this will be actual bodies on 4-hourly time frame, so you always have to bear that in mind. So far, who is here? We have Jones, we have Raymond, we have Pat. Okay, so when you see the bearish engulfing pattern, what you would expect is that price goes to the downside like so, and you will also see a lot more candles coming up like so, until another one, maybe green candle, can also come up here. All right, cool. The green candle can also come up here and form another bullish engulfing pattern, and price takes off like so. So you can see exactly what Homer Mona Lisa was doing. He observed all of these patterns and he began to have a coded language for them, which is what we have been using for the past 200 years, and these have been working. If you have watched my videos, you will know that I always talk about candlesticks and patterns because they have been working for the longest time possible. The RSI and the stochastic and all of these things, these indicators, they have not lived as long as these candles. I mean, these are the alphabet of trading. You must understand candlesticks before you even start. You must understand this. This is where you start your understanding of trading, and from here you will then understand that candles can join with other candles and form patterns like the bullish and bearish engulfing pattern we are seeing right here. So All right, so now we are going to understand that these candles joining with other candles and forming, candlestick patterns can all join together to form a larger pattern. All right, so that now is how you start drawing trend lines and stuff. So it's a group of many candles that, as they continue towards the same path, I would say, form a different pattern, or say a pattern that can make you predict the market in a larger scale. So for example, we will go to I think we should go to a chart where you will actually see some candlesticks and stuff. So all right, so when we look here, what do we see? This now is Bitcoin. Okay, this is Bitcoin, and what are we seeing here? This is just like the same thing we were talking about in the previous candlestick video. Now, of course, as I've said, I have a video for candlesticks, which you can use the link. I think it's I have a video for it. I have a video for candlesticks in the playlist, beginner's guide to technical analysis for complete beginners. I have a video about that, just so that we don't waste the time and we'll only talk about candlesticks. That will take us an entire year if we were to go only in that. So all right, we have okay, good. So this is Bitcoin on the daily time frame. Okay, and as we were saying, let's go to the weekly. The weekly will be much more smaller, so you can actually see a lot more stuff. Today is what's today? Today is Saturday. So Saturday, the weekly will end on Sunday. So if we end anywhere below here, well, Bitcoin will continue to go to the downside. All right, so if you are still here, congrats. This is good. All right, so what are we seeing here? We are seeing a lot of candles, and as we were saying before, candles give us info on what is going on in the markets. All right, info on what goes on. So if we look here, we will see this. All of these candles that you see here are on the weekly time frame. That means each candle here consists a week of price action. So it takes a week for you to see any of these prices here. It takes a full week. So from Monday to Sunday, that's what each candle here represents. So this candle here this candle that is here actually forming, that is actually working in motion right now, this is this weekly candle. Yes. Okay, now as we were saying before, every candle will maybe combine with another candle to form a pattern, or determine where price could potentially go. Always know that it's all about where price can potentially go. It's not where price will go. It's a potential. There is no like certainty. It must not go there. It can go there. So all of this, that's what we are basically saying here. Now, all candlesticks combined with other candlesticks over a period of time will form a pattern. Okay, will form a pattern. So, and patterns are actually they are not like objective. They are somewhat subjective in nature. You have to read them for yourself. I could call this, for example, I could call this a double top, and you will see this as a head and shoulders. Yes, as a head and shoulders. So the double top will have a neckline, the neckline here. The head and shoulders here will have its neckline here. Yes, will have its neckline like so. It will not be like so, because that will not touch these candles here. Anyway, so candle patterns are actually very subjective in nature. Okay, and but stuff like bullish engulfing candlestick, these are not subjective. These are, you just have to see them, and they are actually what you see, and everyone can define it that way. Like this here is a bullish engulfing, and you actually see what we were talking about before. We were talking about having a bullish engulfing pattern, and the price goes to the upside. That's exactly what is happening here. The same thing here. So what you could take back from this is that when you have a candlestick, a red candlestick that is being engulfed by a green candlestick that's later engulfed by a green, how many of you are still there until now? We have about 4. Okay. No, I like to... Oh, you're still here. Oh, all right. Okay, that's cool. All right, but I hope up till now everyone is understanding everything. Yeah, if you have any questions, let me know. Just let me know. Like, don't just let me continue without you understanding. Any questions at all, let me know. Yeah, I'm getting some questions from some of you in the group. Will BTC continue? Will BTC keep going up in the next couple of hours? I do not know, but we will check that as we are going through this video. All right, cool. Norman Marina, cool. I am liking it so far. Good. Wish to be really good at this. Good. All right. So, but you have to understand that what I'm teaching here is with time, particularly with these candlestick stuff, you will have to adopt your own method. And what I'm gonna be teaching you is my method. like what has been working for me. So after some time you will start to do stuff what works for you. Yeah. Liking it so far. All right, cool. Yeah. So yeah, so that's basically so bullish engulfing pattern can have engulfing red or engulfing green candle. All right, so bullish engulfing candle can be in these ways. You can have this. Good, thanks for the question. I like more questions because that tells me that because I cannot check if I am being too fast or too slow without you telling me. I'm just making this video because I told you guys that we'll start from here. So it's really just for you. Any question you have? All right, cool. Any question you have, just let me know down there in the comments. I am seeing all comments. So if you have any questions, just let me know, even in the group. All right, so bullish engulfing candlestick can be like so. We can have a bullish engulfing candle okay. All right, so we can have it looking like so. We can have a red candle that looks like so. So these are basically the types of bullish engulfing candlesticks. So it's reverse psychology, yeah? Before we were talking about a bullish engulfing candle that looked like so. We had this like so, and the red one was somewhere here where we were saying it was a spinning top, yes? Okay, so bullish engulfing candle, the one we were talking about before, looked like so. Now it can also look like so. It can also look like so. But it's reverse psychology. That's why I'm saying that this is about understanding what they mean, not just knowing the name. The name does not matter. What matters is understanding what the candle is telling you. What info are you getting from here? This is telling us that price started here because this is the open of this candle. Red candles open from the top, close below. Green candles open below, close on the top. Okay, so this is telling us that this was the open here, this was the close here. So it opened, went up a bit, so people sold, it started to go down. Let's just say this is FTT, for example, and it plummeted right down to here. Now it plummeted here, but some people bought a bit of it and it came back up here and closed here. Now do not forget that we have a red week here. Always pay attention to the weeks. They tell you information, as I said earlier. They give you information on what people are thinking, what is the buying and selling pressure. A very long week like so, if you have a very long week like so, and this is telling you that a lot of people are selling. All right, this is telling you that a lot of people are into the selling business. Yeah. So if you have a very long week like so, it's telling you that a lot of people are selling. And if you have a very long week like so, no, it should be up. All right, if you have a very long week like so, it's telling you that a lot of people are buying. So the week gives you the answer. The week here also tells you people. So from here you can easily get something that looks like so. You can easily get something that looks like so, like so. Yeah, because you had very strong selling pressure here, you can easily get the same thing going down here. Remember that these are all just probabilities. There is no fact. It may as well just return here, but what you see there should tell you where the price is most likely going to go. It tells you the market sentiment. It communicates to you what is going on in the markets. So we had this as our bullish engulfing pattern, and we had this huge selling pressure with this big red candle here. But after the big red candle, let's say this is on the hourly time frame, so 1 hour, yes, and second hour, this is the also 1 hour candle, but this is candle A, this is candle B. Does that even look like B? Okay, good. We have candle A, candle B. But so after the selling pressure here, what happened with this one? This resulted in a spinning top. So what is happening? As I said before, it is about the markets not really making a decision. All right. So let's say everyone sold a lot of FTT when their saga began, and the next day, or say the next hour, they were selling this on this hour here at 1 o'clock. Let's say at 2 o'clock, a lot of people were not really selling. People were like, perhaps this could actually go back to where it was before. Yeah, so that's the sentiment that you are getting from this candle formation here, the bullish candle, but it's not really so bullish like this one. It's a spinning top, suggesting that the market is consolidating basically, but mostly to the upside. This one is consolidating basically mostly to the downside, but after this one you have a big green candle that engulfs this one here. This tells you that the price is bound to go to the upside, and after this huge price drop, the fact that people are not just selling it to zero, but are mostly to the upside, it means there is very bullish news ahead. Because to have this means, yeah, you really had some bad news. But if you had this and after you are, instead of just going down, you have a bit of a consolidation, and your bias is shifted to the upside, it means that price most likely could go to the upside. So what we would expect is price goes up like so. Yes, so that is you will see the bullish engulfing pattern happening with a green candle after a red candle, and is that the beginning of a bear flag at the first drawing? Beginning of a bear flag, beginning of a bear flag. Oh, that was the bear pennant. I'll come to that. So yeah, so that is how we would expect price to behave in this scenario. Now, if price actually goes like so, then this candle will be a confirmation candle to this price action here. If price actually goes up like so, this candle here, ladies and gentlemen, will be a confirmation candle to this price action here. So as I said, since you cannot know where price is going to go, you need confirmation. So your confirmation is always coming in later. So the confirmation here of pullback before yes, there is a possibility of a pullback before continuing the pattern, because it may as well have a drawdown from here. It may as well have a drawdown. Let's say we had this going on here. It may as well have a drawdown from here. So that will look like so on the chart. That will look like so we have a drawdown like so, and after this it goes to the upside. It goes to the upside like so, and we have this candle. Yes, so this now is raised and it goes to the upside. So we have a drawdown and a confirmation, and this will still be a very stronger confirmation than this, than just having this. This will be a stronger confirmation, because if we are following the reasoning of this candle, as I said before, it's not the name, or that does not matter, it's the reasoning behind this. This is telling us that people actually sold, but price reversed and went up here. This is telling us that this price action here is legit and prices are bound to go to the upside. So if I saw this after this, I am more convinced of upside pressure. All right. Now, a simple way to anticipate bullish and bearish engulfing patterns is just to look at the candlesticks themselves while they form. So if you see a red candle and you see a green one after it, just look to see if the body of the red candle is engulfing the green here. So this is a bullish engulfing pattern. And no, what am I doing? No, scratch that. Let's bring this again. Okay, we have this like so. We have this like so, and this classic bullish engulfing pattern. All right. King of here. So would expect that price continues to go to the upside. And if you see this as well, if you see this, and I will just go to the charts and show you examples of this so that it's really more relatable. It's really funny when we're looking at them like so. If we go to the charts, and am I confused by the colors or something? Okay, let's just go to the charts and we see them live. Okay. All right, I think it's clearer now. Okay, good. Now, this is an example of what we were just talking about. Yes, this is an example of what we were just talking about. So if this price closes here, this would have been a bullish engulfing pattern. But do not forget the terror by night. This is the terror by night. We have a bullish engulfing pattern here, and it continues to go to the upside. And yeah, we're just going to explain this as it is on the chart so that it is really a lot more relatable than just drawing them, you know, on a random whiteboard. Okay, so we have it go up here, and we have a huge dive to the downside. And really, I did not even have this in consideration before talking about that other pattern there. Okay, so we have a huge dive to the downside. So even just here, so the combination of this candle and this one is a bearish engulfing pattern. So as we said before, we expect a confirmation candle to this pattern that we see here. We need a confirmation candle. So if this candle, this weekly candle, if it closes to the downside here, it is confirming this. That's what it's confirming. And that's the same thing that happened here. Now, of course, it may as well go to the upside. If it goes to the upside, be warned, it may come back down here. So you have to join a lot more things. It's not just as simple as we say them like this is a bullish engulfing pattern and it's going to go up, you're happy, everyone is happy. No, it has a lot to do. You have to combine a lot more things, and we are going to go through some of the things that you have to combine, especially what I combine to determine price movement. Okay, so if this candle closes here in the green, then this would have been a bullish engulfing pattern, and if we have a green candle closing even above again, it will be confirming the bullish engulfing candlestick pattern. So we might expect price to continue going to the upside from there, given that other factors confirm it too. So you always need other factors and confluences agreeing with your analysis. So that's basically what we see here. So this is the bullish engulfing pattern, but if you take this away, if you take this candle away, this will be a bearish engulfing pattern. So we'd expect price to go to the downside from here. I hope up till now everyone is clear on understanding the language of candlesticks. These are people actually selling because they are thinking of something that will happen in the future. It's not really price. We are not seeing, this is not how much Bitcoin should be worth. Like, this is not its intrinsic value. What we see here is market value, is what the markets think it should be worth. It's what the markets are ready to buy it for. So if you go to an exchange, you can buy it for $16,623. It's not it does not really mean a Bitcoin should be worth 16,623. This is what a lot of people confuse me with when I tell them that Bitcoin could go to $3,000. Yeah, they confuse it because they think, oh, no, it's too important. It can never go to 3,000, Everyone is like, no, it can never go. That can never happen. Ethereum cannot go to $90. It can't happen. It's too precious to go to that value. What they confuse is that's the market price. And market price is what we see on the charts. The charts tell us how the markets feel about the future, not about now. Not about now, about the future. You buy or sell anything because you think maybe it will look good on you when you wear it, or maybe it will preserve your value if you're buying maybe a Lamborghini or a Bugatti, because you think, well, I have a lot of money and I should spend more money on a Bugatti, and perhaps in 5 years it will be worth a lot more. If you might not know, some rich people do that. They buy expensive cars not just because they like them. They are worth more later in the future. So that's one of the reasons why they buy those expensive cars. So some people might buy them for those reasons. Some people might buy Rolex watches for those reasons, to preserve value, to sell later for a higher price. So people buy or sell based on what they expect, they anticipate in the future. So it's not about the now. That is not what we are reading here. We're not reading now. We are reading what people are thinking about the future. And when we see a doji, a spinning top forming like this one on the weekly time frame, it means that throughout this week, price has been consolidating and people really don't even know what to do. They don't know if what will happen next week, what will happen next month, but they are more on the optimistic side, and that is why we are seeing a green spinning top. If we were seeing a red spinning top, it means they are more on the, they are feeling really, really bearish, but they think it might still go up. So the price is consolidating at one at a single area. So that is basically how you should be reading charts. Don't read it like the price now is this. No, read it like people are thinking that this will happen. That is what you have to be reading. When you are looking at the charts, you should be looking at them based on how you think people actually feel. So if you start to look at the charts this way, it will change the way you actually think overall. You know, when people tell you that maybe Sam Bankman-Fried did this, you are saying that, but wait, the charts were telling you some time ago. The charts were telling you some time ago that Bitcoin is going to go to these levels. Well, something had to happen. You know, something had to happen. And we are not wealthy enough to, you know, move billions or millions of hundreds of millions of dollars. And so people like that have a lot of info, like insider info. So they will move all that money, like this happening here. They will move all of this, and you can see that in the charts. And by this tells me that they are expecting something worse. You know, that's what this tells me. But when it gradually goes to the downside, then I understand that people are just, you know, they are not really like super scared that they just want to sell all, but they are not so optimistic. But when you see large candles like this and like this, or like you can also see it on the bullish side. Yeah, this was 2020. You can also see it happening here. Now these were weekly candles. These people expected something more to happen, and that more came up here. You can see that as we reached the all-time high, the size of the candles reduced, which means they were not really expecting something, you know, a lot at this level here. So reading the candle can actually, it can change the way you see them. You see price action. You don't read it like you are reading price anymore. You are reading what people are thinking. That's basically what we are seeing. And it also has to do with the topic of support and resistance, which we'll probably be talking about that in our next live session. But basically the support or resistance is where people are, you know, hesitant to buy more or to sell more. It's about hesitation. If you came up here and you see that price came up to 57,000, it came back down to 45, went back up to 59,000. That's just 2,000 more from 57,000, and came back down to 50,000, and still went back up to 64,000, came back down to 49, went back up to 57. Now that's a consolidation. Yeah, it really shows that that's a consolidation. So you can just draw a line from here to here. This line is not support as in, you know, like you are sitting on support or anything like that. This line is telling you that people are hesitant to sell lower than this level here. And the line to the upside tells you that people are hesitant to buy in more as the price goes up from here. That's the whole theory of support and resistance. Be uploaded later. The video will stay here on YouTube. You know, if you have the link, you can always watch it. The link is in the premium section, so if you have the link, you can always watch it. So that's basically where the idea of support and resistance come from. It's where people are willing to buy more, and where people are hesitant to buy more, and where people are hesitant to sell more. Breaking support simply means you have broken that area where people were hesitant to sell more. So they will be willing to sell even more upon breaking that level. All right. So that is basically how you have to see this. You have to be seeing this as you have to understand what is going on. Don't just learn about the words. That's why with the words, we can always define them at any time. You can find the definitions anywhere. But the explanation behind them, that is what we are after. in this video: market psychology. So that's what we are learning. What we're learning today is market psychology, what people are actually doing, what this means when we say that Bitcoin should be bouncing at this level here. I have this my picture where I posted even in the groups, where I talked about maximum area of interest, where and it's somewhere around $10,000. Now I'll make a live video only for the Fibonacci, so of course we still have time for that. So the picture where I talk about maximum area of interest, that area means that will be where people will be hesitant to sell more. Maximum area of interest to the upside will mean, if I put the maximum area of interest up here, this will mean that this region will be where people will be hesitant to buy more. So you want to buy where people are hesitant to sell more, and you want to sell where people are hesitant to buy more. Yes, so far I hope you did learn something in this live video. We will try to organize these videos in a way that people can actually participate. I don't just it wouldn't really make any sense for me to come live and make a video and people aren't there to comment and say if they understand or if they do not. It will make no sense. That will just be a regular YouTube video. The purpose of this is so that people can actually ask questions if they have any, and if you don't understand anything, you can ask. If you understand, you can say that you understand, and we move ahead. So it's all about us trying to go as fast as possible with this, and so that people actually understand it. There are a lot of videos on YouTube only for this, but those are videos. You can't even guarantee that your question will be answered if you asked a question in the comments. But having a video live is good because you get to ask questions live and I answer them as we go ahead. So I believe we have come to the end of the market psychology video. Let me see if there's a question I haven't answered. Do you know which exchange charges the lowest for moving BTC to a wallet? Well, I would say Binance. I just used Binance. I don't really have a problem with because it's not usually much, I just use Binance. And there are a lot of problems with exchanges now, so you better be careful. You want to use the exchange that has the most liquidity, and Binance is about 68 billion of I think raw storage of their assets and stuff. That was they were talking about what were they talking about? It was assets under something. It's like talking about the assets that the exchange have, and Binance was at about 68 billion, and this crypto.com was at about 2 point something billion, with Shiba Inu occupying it's the proof of reserve stuff. So I just say that better have your crypto where they have the most reserves. If something happens, they can they have the money to pay you back. Better have your crypto there, and if you have to move to a wallet, I don't think it'll be really that expensive, so it's probably the best for me. I don't use a lot of exchanges for those types of activities. I just use Binance. If I need to get an altcoin that I can't find on Binance, I'll go to Gate.io or KuCoin, but definitely I'll be shipping it off to my wallet. But mostly I am on Binance. What if you can't use Binance? In Canada we can't trade futures. You can't trade in Canada. I think you will have BitGet. Ontario only though. You'd have BitGet in Canada, yes? I think you'll have BitGet in Canada. You have BitGet in Canada so that you can also Ontario. Yeah, try BitGet or Bybit. I don't know if Bybit is also in Canada. Bybit. Yeah, you can try BitGet. BitGet is good. BitGet is good, and the fees are low, even for trading. KuCoin fees are enormous. Don't go for KuCoin. KuCoin fees are just exorbitant. Yeah, better BitGet is good. Try BitGet. All right, guys. Thanks so much for being here today. We will talk more about scheduling a time that suits most people. I know it's night to some of you. Yeah, and I don't want to keep people here, and it's really needless if it's just a video. Well, you will watch it later, and some of the content here you may not find it free anywhere. So it's nice that way, but for you to get the full product, to enjoy and really learn, it's good that you should be live here, and we all move together and we learn together, so that if you have anything you don't understand, you can ask. When making a video, it's a bit difficult to know what people are thinking. Like you don't know if they understand or not. You don't know if you are oversimplifying it, or if you are making it so complicated. This channel is all about understanding crypto. My entire thing is about understanding crypto, bringing crypto to the understanding of anybody, essentially. So yeah, we'll look at that just now. Yeah, so it's more about making the average person understand everything. So if we cannot do that, then we may as well just make a video. I may as well just make a video and post it. Yeah, but no, we want to understand it. All right, so here we are on the weekly time frame. We can just narrow down to the daily time frame. Yeah, now, so you can easily see a bear pennant forming here on Bitcoin's daily time frame. Now, bear pennants are biased to the downside. As we were saying before, you can see the week of this candle. This candle went to the upside right to about, this is the daily time frame, so this happened today. So this candle went up to 16,900, and Stratos is on Get.io, but I would really say that you should be careful with Stratos, because it is a microcap. Yeah, it's a microcap. You should be very careful with it. Microcaps can drop by easily drop by 50% in a day. So yeah, be careful with that. When I talked about Stratos, it was at $1.40, and after a week, no, not after a week, I talked about it, and it was at $1.40, and after say 3 weeks, yeah, 3 weeks, it went up to $5 in a week. Like in a single week, it went up by about 4x. So yeah, be very careful with microcaps. They can do wonders, and we're in a bear market, so be very careful with that. A bear market simply means the bias here is to the downside, so be very careful. So yeah, here we can see a textbook definition of a bear flag on Bitcoin. So the bias here is to the downside. And you can still ask me questions if you don't understand what I'm doing here. Maybe you'll just learn it as I do it. So as we were saying before, if you see candles keep going up and coming back like so, then what we are looking at, ladies and gentlemen, is this trend line here represents the zone where people are hesitant to buy more. So as we go more into the day, so from today, tomorrow, after tomorrow, people are becoming more and more hesitant to buy at a higher price. Yes, what do you think of the fan tokens getting an effect with the World Cup? Well, I do not trade coins like that, or I do not invest in coins like that. They are momentarily affected by the World Cup. The World Cup will end and they may all just go to zero. So I want my money to be in something. And the bad thing is you don't know when they will go to zero. Okay, you don't know when they'll go to zero, so perhaps they go tomorrow. What if the whales that were pumping those coins decide to pump them up and then just dump them? Of course they will not tell you that we want to dump those coins today. So you have to be really, really careful with coins like that, coins that don't have, coins whose use cases are not they can easily, yeah, so coins that can easily go to maybe 100% in, say, a week. They can also do 100% in a week, so be careful with that. It's the entire narrative that is taking them to those levels, like really pumping the price up. So I don't want my money in that. I want my money in something that I can sleep, and I know that there is a chance that this actually, even if it dumps, I know that there is a chance that it still goes up the next year, even the next month or the next year. I would like to tell you that if you are investing in crypto, like, if you're really investing, make sure that the money you are putting in as investment in crypto, it should not be money that you will need in the next 5 years. Now, a lot of people will just want to put in money and get gains the next day, but be very careful with that. Because if it goes wrong, it will go very wrong. Don't go borrowing money and you want to invest in crypto because you hope that you will get a lot of money in the next month. No, expect to reap from your investments in 5 years. That's the best strategy anyone should ever give you. That's the best advice anyone should ever give you. So not looking to use them for long-term gain, but only for short term. Well, if you want to use them for short term, which by what you are saying, you mean that you want to like buy and sell them now, I wouldn't. They may go up, they may go up, but what if they dump? That's what you have to have in mind. You might be like, well, I have a stop loss, so you would have just wasted your money, because you would have bought something that it's a complete gamble. There is no strategy there. You're just buying because you hope that it's going to go up because of the World Cup. There is no longer term vision for them. For example, I do not have any STOS right now. I don't have any Stratos coins or tokens. But when I will be buying them, I will do so because I think in the bull market, Stratos, the network will be used, and people will need the coins of that network. So that's why I will be buying in. I will buy in because I believe that if the network is to be used, then people will need its coins. Those coins would have been gotten by me at an early stage when they were cheaper. You understand it? So it's about futuristic thinking, like far futuristic. Of course, you may buy the fan tokens and they do very well. You know, you can gamble with that if you just wanna, you have some money to gamble with. But if you do not, I won't say you go into those types of coins, because they will not tell you when they want to dump. You know, if a coin is to dump, it won't come knocking at your door that, you know, go and sell before I dump. It will just dump with your money. So accept its money you are comfortable losing. Don't go gambling with such money, you know, in the markets right now. And we are in a bear market, for crying out loud. We are in a bear market. The bias here is just to the downside until we have, you know, had the Bitcoin halving, or maybe we have a Fed pivot. Then you could start to say, perhaps prices will go up, you know. But until that happens, the main catalyst for bull markets have been the Bitcoin halving, and until that happens, you cannot switch your bias from being bearish. You just cannot. I think when we reach the bottom of this market, price will move for weeks or even months, you know, by very tiny percentages. I think price will, you know, just oscillate by $50 to $100 per day on Bitcoin, and altcoins will generally just bleed into oblivion. That's what I think will happen. And until then, until I have noticed that type of price movement, I will not switch my bear bias, except we reach 3K, of course. Yeah, so that was your question. I don't know if any of you have any other questions. So if we look at Bitcoin on the daily here, we see a textbook definition of a bear pennant. So this price pump right here will tell us where we should take our target from. So this is on the daily. If we take from here, this is the ascending support right here. As we talked about before, the ascending support, which I was saying is where people are hesitant to sell. The price went up here, came down here, went up here. This forms what? A double top. Daily time frame, this forms a double top right here, and we have the double top's neckline here. Now if you measure from here to here, that will give you the target of the double top. But did you short FTT? Yeah, actually I wanted to short FTT at $22, and I was trying to talk about this earlier on the Discord group. I wanted to short at $22, and I was like, nah, perhaps this is not a good entry. The good entry would have been at $23. And it's really good that you asked this question, because a lot of people would say your entries are not so good. Yeah, well, I've missed a lot of trades. I missed Terra Luna's short, because I was looking for a good entry. I missed FTT's short because I was looking for a good entry. I'm a swing trader, meaning that I hold trades for weeks even. You know, I don't enter trades hoping to just get out today. I don't enter trades hoping to just be in profits throughout. You know, I enter trades because I think the price will eventually go to my target point where I take my profits. So that's why I enter trades, and I don't follow the idea of stop losses. With swing trading, of course, I follow the liquidation point. So it's more of entering the markets to win. It's not just entering the markets to sit by your computer all day and watch price action. No, it's entering the markets with the right targets to win. You may not have the best entry, but if you just sat there and you're hoping to get the best entry, like I did with FTT, like I did with Terra Luna, well, you missed out on a lot of gains. I really wanted to take that FTT short, and I saw it was at about 21.93, and it came up to 22. I was like, this is too, it's not the best entry. I left it. The next morning I saw it at $14. So yeah, I missed out on a lot. And my target for FTT was $4, I think. And I was waiting for the best entry. So sometimes you just miss trades that way. It's nice to answer, because as newbies we'll be expecting daily trades. If you are wanting daily trades, if you are looking for daily trades, that's you being a day trader. So over time you are going to decide what type of trader you are. I'm a swing trader, which means I focus more on my monthly gains, how much I gained this month, not really how much I gained on how many trades. I could take one trade per month and I have 500% gain. That's enough for me for a month. You could be a day trader and you have say 200% gain per trade, 500% gain per trade, and you also lose the same. So I focus more on making it overall in a month. It's more like seeing trading as a job, as something you can depend on for your livelihood. It's not just sitting there all day and watching your screen and being nervous. No, it's about taking your time, constructing a trade, and actually making. I was looking at this one right here, this Bitcoin's competitor earlier. Yeah, I was looking at it earlier, and it looks from the way I see Bitcoin, if this actually came down here, it will put us at very enjoyable levels for a take profit. So yeah, I was looking at it earlier as Litecoin, I think. Some guy was asking me what I think about Litecoin, so I was looking at its charts, and it looks like it broke out of a bull flag and it went to the target. The target of the descending wedge here. I know I'm sounding a lot more complicated now, but you just have to follow. But it's always more important to see the bigger picture. Yes, it's always more important to see the bigger picture. If you look more on stuff like enter trades now and just get out, that's not great. That will just make you nervous, and you cannot do this for a long time like that. You need to. It's me who asked about. Oh, okay, all right, cool. So yeah, you have to look at this for having a long-term mindset on it. You don't have to be you don't have to look at it from. The more you trade, actually the more experience you get with trading, the lesser you will trade. Yeah, the more experience you get with this, the less you will trade. So it's really better to, in my opinion of course, to trade less, and in a way that you can actually follow, in a way that you can do for a longer period of time. If you are only getting in and out of trades, that will not help you long term. Long term, you will just be old and tired. So you need a real strategy. If you see people who are even let's say day traders, or even just scalpers, they don't trade every hour, they don't scalp every hour. They may just have some days that they trade, or some hours that they scalp. So they may trade Tuesday and Thursday, and that's it. They don't trade on any other day. Their strategy only falls on Tuesday and Thursday. Some people may be like that. So yeah, it's better that way, because it gives you the time to do whatever you want to do in life. I mean, you don't have to be on your screen all day. What I do is I take a trade and I just sit and relax. most of the times my profits get hit, like most of the times. In the past month I've traded like last month. The other short call I made on BTC is in profits right now. The other trade I called on Solana, what's its right now, it's also in profits right now. So you see, I don't sit there and I'm being like, oh, it's going up, it's going down. No, I just sit and relax and I go about my day. I don't watch the screen. I have calculated it and okay, I'll answer that. I have calculated it and I am just sitting and watching the charts. I am just sitting and doing my other things, making videos for TikTok, making videos for YouTube, or just talking with you guys on Instagram or on Discord, just relating with people. But I don't sit there all day watching the charts. That's a very tiresome way to do this long term. You won't do it long term if it's like that. You won't, you won't. So I am more into this long term, and if you want to follow my way, and which I really promise you, it's the best. It's really the best. Going about this, by just, and this actually broke the 1618 Fibonacci ratio. Damn. Next support for it is at $4. So going about this in the stressful way of looking at price action all the time, that's not gonna help. That's really not gonna help. That's a very bad way to go about this, I would say. How many targets does a bearish or bullish pennant have before reaching the ultimate target? Okay, so the bullish pennant, a bullish pennant looks like so. Let's take path. Okay, so you have a price at some point here. It goes like so. Now this is not a single candle. I hope everyone is in understanding. And it comes down like so. It goes up like so, comes down like so, up again, down, up, down, up, down, up, down. Okay, so that is a bull pennant. Yes, so you have an initial pump from here up to the target right here, up to the resistance here. So this right here on this bull pennant is where people are no longer willing to buy at this price. So the price drops, so people start selling. I don't want to say the price drops. I want you to see it as people actually selling. That's how I want anyone that follows me, anyone who is on any of my platforms, that's how I want you to see price. Don't see it as price dropping. See it as people actually doing something. It's literally, it's something actually happening. It's not just price as people will call it. That's why when you say Bitcoin could go to $3,000, people are like, no, that can never happen. They don't believe it because they don't see it as people actually performing something which you interpret, and that these people think it could go to this value. So every prediction I make, I take from the charts, and the charts tell us what people think price is going to go in the future. All right, so in a bull pennant, you would have price going have an initial start up like so, and it reaches this resistance here. Now it comes back to the support right here where people are no longer willing to sell, and price goes up. Now you understand. So we it starts to narrow in here, and this narrowing, the narrowing as price goes into this channel inside here, like so. If you put that in red, okay, yeah, as price goes in this channel inside here, what is happening? This is actually something that looks like a doji. So it's actually something like this, a consolidation. If you were to see this, as a single candle, you would see it like this, a doji. Yeah, and if you were to see this price rise here, because we call this many candles, as a single candle, you will see it like this, as a bullish candle, like so. Now of course this now will be a bearish engulfing. Yeah, that is if this this doji is down here, so it should be somewhere down here. It should actually be like so. Yes, now what's going on? If this bull pennant breaks to the upside, what will happen? If it breaks to the upside like so, or I'll come back to that. If we see this bull pennant break to the upside like so, what will happen to price? Price will go to the upside with the ultimate target, with the target before ultimate target, the target of this. We would have to take 3 wide sides. So normally you would see it looking like so. I've made it too compressed here, so look at it more like so. Look at it more like so. So price comes up here, hits this, comes down here, 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 and here. Okay, good. Now the first target of this bull pennant will be like so. So this right here will be the first target. So the distance, the first distance where price touches here to here, so you have this distance. Yes, you take this distance and put where the price broke to the upside here. That's the first target. That's where you expect price to go up here. So it's a story that price action is telling you. People think this price has been consolidating right into here, but it's actually telling you that people are, as it breaks to the upside, it tells you the full story. People were anticipating that price will go to here, so more people will be willing to buy up to this level here. We will call it target 1, which will make the resistance 1. So at this level, fewer people will be willing to buy at this price. So it is we have a very high tendency for price to bounce back from here and retest the previous resistance here. Now this resistance on the retest will be support. So if price actually goes up until here and comes back down on the retest, the prior resistance will be support for price to continue again to the upside. And where will it be going? It will be going for the second target. That second target is the distance from here to here. So the distance from here to here is not the same distance from here to here, because we have the channel narrowing into this direction here. So if we have it like so, if we have it like so, it would look like this. Now these are just examples, remember. It would look like this. So just picture it as this distance really being, you know, a lot more larger. We will make an example of it. I think in my chart where I talk about the maximum area of interest, you can find it even in the Discord group and the Telegram group. I think I left it there. Yeah, maximum area of interest, you can find it on that chart. You will see that price is bouncing at my maximum areas of interest. So the distances, and I have a video about this as well. I have a video on bull and bear flags, how to measure them, over on YouTube. I will leave the links below. Yeah, I will just leave the links to those videos in the description of this video as we close this session. So the distances are always the targets, the price targets. That's where price is going to find resistance. Now, the last distance, which is this one here, distance from here to here, that's the last distance before the ultimate one. This is the last distance. Now the ultimate distance is from here, where it broke from. Maybe price was consolidating somewhere here. Maybe price was having some kind of consolidation like so, and broke from here to the upside. So where it broke from here will be the ultimate target for the bear pennant, for the bull pennant. So bull pennants are continuation patterns, and they indicate that price is going to continue to the upside. You will have price meeting the targets of this price consolidation here, and you can just measure them by taking from where a candle closes here to where a candle closes here. You measure the distance between them and put where the price broke to the upside here. Now when it breaks to the upside, you could say, well, you wait for a confirmation of that break by price retesting that resistance, where it will now be support. Where when it retests that resistance and starts to go up, that's when you take a trade. You may as well just enter it, because it may not retest and just continue to the upside until here. So it really depends on a lot of other things, which we will be covering as time goes on. Okay, but you have to know that the first target for it is the top of that bull pennant, the top here. Then the first target before the ultimate one is the top of that bull pennant. Even on a bull flag, the first target, a bull flag, will look like so. Yes, now the first target of this bull flag is the top of that bull flag. So you might also be like, why is it the top? Like, what's so peculiar about that top? Because a bull flag involves the movement of price in one direction to the upside, followed by a falling wedge. So you can simply see price going like so. You can simply see price going like so, and you can also see this falling channel here. Now this falling channel, when you join it together with this price moving like so, you will have a bull flag. And the ultimate target for a falling channel is the top of that channel. So this is the ultimate target. If it broke from here, if it broke to the upside here, the target of this break melt up will be this zone. So price is bound to come here before perhaps going back to the downside. It could retest here and continue like so. All right, so it will easily do that if it was attached to another price move to the upside. So the price move to the upside plus the falling wedge, or falling or say falling channel or downward channel, will be this. The ultimate target will be from the bottom of the flag to the top right here. You measure that from here to here, take this, put here where the price breaks to the upside. If the price broke here, what's this? Okay, if we had price break here, that measurement has to come from here. All right, that measurement has to come from here. Now, as I said before, patterns are very subjective, you know, so you have to see this by yourself. I cannot tell you that if you go to the charts you must see it. You could not see it. So it's something that you have to see by yourself. And you will, over time, you will start to notice them a lot more. If you are not noticing them now, noticing the charts, the patterns now, don't worry. Over time, you will start to notice them as we go ahead in this in these lessons that we bring up here on YouTube. Any more questions? Do you have any more questions for me? In the weekly, we see the doji from the bearish pennant in the daily. In the weekly, we see the doji from the bear pennant on the daily. Bear pennant on the daily comes to weekly doji. Yes, I understand what you mean. Yes, so yes, I understand. So there is a bear pennant on the daily that has formed a weekly doji. Yes, this is the weekly doji. Now that weekly doji forming, this is the weekly doji that you're talking about. This one. Yes, good, very good, very good, very good. So you see that the bear pennant means price will go to the downside, of course. Now that bear pennant is a consolidation of price, you know, in one direction. And on the weekly, because the weekly is on a higher time frame, this tells me that you are really understanding what I'm saying here. Because the weekly is on a higher time frame, what we see on the daily will be a single candle, and that single candle here is a single doji because price is consolidating on the daily time frame. Now if this ends as a red candle, we may as well just continue a dump from here. All right, if it ends as a green candle, we may have a dump, but there is a good promise of price returning to the upside because it simply means we would say this is how do they call it again? We have this. I've been talking for a very long time. I think I've been talking for like 3 hours maybe. So basically we have indecision here, but if it ends in a green candle, it means there is indecision, but the bias is mostly bullish. There is people are optimistic. All right, but if it ends in a red candle, people are not optimistic. They think the price is going to continue to the downside. Now this is also it's a pin bar. Yeah, it's a bearish pin bar pattern here. This candlestick that went up here gave us the wick to the upside after this bullish engulfing candle. This is confirming that this is false. That is what you see after this type of confirmation, a bearish pin bar pattern. Never you forget this. If you see this on any time frame, be wary of investing on that coin or token or whatever, or be wary of longing. If you see this type of pattern, a bullish engulfing candlestick pattern that ends up in on this type of candlestick formation, so that's a bearish pin bar pattern. It's better when you see them on the weekly, daily, or 3-hour time frame. It's better when you see them on those time frames. But when you see them on the maybe 5-minute, it may not mean much because it's a 5-minute candle. It does not really change much. It's how maybe people thinking of what will happen in the next, say, 10 minutes. It's not really like you cannot depend on that for a real trade, but you would really want to depend on this. Now this is something that we can also see on Solana's weekly right here. We can see this. We can see a bear flag. Actually, that's a bear flag. We can also call it a bear pennant because if you're measuring from the bodies, then it will look like a bear pennant. So if you're taking from here, you can call it a bear pennant. And the target for that bear pennant, of course, is where it broke from the flag to here. So we would expect Solana to go to $9.28. Hallelujah. Yeah, so we would expect Solana to go there, and yeah, it would have met the target of this bear pennant here. I hope you understand how I got my targets now. I think I issued a Solana short. I think it will go a lot lower because Bitcoin will also go lower, but for now that's what I think will happen. Let's look at the Litecoin that we were looking at before. Someone asked about it, and I was really looking at it, and it's somewhere at 62.52 now, and we have the bearish engulfing candlestick pattern here in a bear flag. So if Litecoin is to break this bear flag here, well, we'll expect it to plummet badly. We'll expect it to really go to the downside, because it will mean that the ascending wedge here, remember, falling wedge on the bull flag and ascending wedge on the bear flag. Ascending wedges are bearish patterns, and the descending wedges are bullish patterns. This is an ascending wedge because you see it's sloping to the upside, so price is mostly sloping to the upside after a drop in price. So that is a continuation pattern. It's basically trying to lie to people who don't understand what this stands for. This is telling us that the drop we saw here may as well continue here, so be wary of this. Yeah, and I may issue a short order here. Yeah, so if this Litecoin broke here, its first target would actually be at $38.79. That would be its first target if it broke this region here. Now, breaking this region here really means that if it closes the candle to the downside here, its first target will be $38.79. Second target, which will be the ultimate target actually in this case. All right, now its first target will be 38.79. Second target will be from here. Now, there is a reason why I take the price from here. These two candle closes here mean that there is some significant resistance to the upside here. Why? Because you can see that there will be a trend line here like so. Yes, the same reason again why I said patterns are mostly subjective. You will have to watch my videos with me, seeing them as I see them, before really, you know, catching them on your own at any time. Because yeah, it's kind of like that. There are those things that you cannot just learn them from a book. You must, you know, see them on your own. That's just how patterns work. And they can really be very helpful in predicting longer term. You could see a lot of stuff long term if you are following patterns. So the ultimate target for the bear flag on Litecoin will be $21 to the dollar. Yeah, exactly $21. So if we take a trend-based Fibonacci retracement tool here, that would put us somewhere around the $21 region, actually at $22.54. Now, how do you draw this? I've been talking about this in my other videos. I wonder if there's anyone still watching. Anyway, yeah, I've been talking about this in my other video. So you take the trend-based Fibonacci retracement tool from the top here, this top, yeah, the topmost where the pole is taken from. You take that from here to the bottom right here, so the lowest point right here, and you go to the swing high. Oh wow, you guys are still here. That's encouraging actually. Cool. So it's good. So you take it from the top right here. Good. Cool. Lovra Dinig. Okay, so you take it from there to here, and then you can get your trend-based Fibonacci retracement tool. Now you see how the Fibonacci retracement tool is matching up with price, yes, especially with the 0.7861 here. So if I was to make a trade on Litecoin, my target will be $21, but to make sure that price actually, you know, like I actually take that profit, it will be here at $21.50. Nadir site, we can short it soon and do some DCA if it goes up. Yeah, we could. So yes, so but you know, the 0.618 is a very strong zone of a very strong zone with Fibonacci. This is what you have to know. From 0.382, 0.5, 0.618, these three are extremely strong to break through. If it breaks to the downside from these three, well, expect it to really plummet. You know, yeah, it will really be very bad for any coin if it goes lower than those three. It will be really bad for them. So that's what you want to expect any coin to respect. Where is the, okay, if it hits here, that would basically be its support. Cool. So yeah, so if it breaks here, if it breaks the 0.618, then you know that it may as well just continue to, you know, to oblivion. It's basically at free fall when it breaks this one. If it breaks this one, you would expect to catch it somewhere around the 1.618 Fibonacci retracement. I don't get why I don't find that here. Perhaps that is somewhere around 0. Let's see. Well, that will mean that Litecoin is going to 0, basically, because this is the 1.618. This is the next most powerful Fibonacci. So for Litecoin actually to make it alive out of this eternal doom that we have found for him on the charts, he has to stay anywhere here. He has to bounce from here. Actually, it would be better if it bounced from maybe $32, but if he managed to close below the $32 region and even the $21 region, well, Litecoin may as well just die in oblivion. All right, thanks so much for being here with me today. We will organize another session, and I would like that you have more questions the next time so that we can go. And even here we can see that it has a bear flag here. We can see it with a bear flag. It's bear flagging right here. So yeah, not even just a bear flag, it actually had, and I saw this earlier on ICP today, it actually had this. So what you want to do when you're drawing these lines is you want to draw them as close as possible to the bodies. You want it to touch 3 bodies as you are drawing. It will be best if it's only touching the closest, not the wicks. When I'm doing longer term predictions, I want to draw to the bodies. The wicks are sometimes a lot of noise, and you know, they may confuse you most of the times. a symmetrical triangle, and it chose to go to the upside. If it plummets from here, then yeah, it will just immediately go to those targets. It will start to go to those targets, basically, because we have this ascending trend line in here, which will then act as support. And if it breaks this one, yeah, so we have this ascending channel here. If it breaks this one, then the ultimate target for the channel is here. So it has to break and come down like so. Yes, that's where we want to catch it. Now it's actually better to wait and short when it's here. Means that it broke out of the channel and it's on its way to your target. Shorting it here means that you are, you know, more aggressive with your trades. You need a lot more things to confirm before you are shorting here. I will look more. I will look at this more before I make a call on it. But I think it's going to dump. It's going to dump because I am mostly bearish on Bitcoin right now. Yeah. Good opportunity spotted. Potentially, yeah. Potentially, I would have to look more on it before I give it a short, because the daily candle will be closing in 43 minutes. Yeah, 43 minutes. If the daily candle closes in 43 minutes, when we had a bullish engulfing pattern here, we had a resistance, some resistance here, and price head back down to the downside, forming another bearish engulfing pattern. This is resisting, this is denying this target. So normally it will want to retrace 50% of this candle. Retracing 50% of this candle will be in the next day. That next day may as well be out of the channel. It won't be out of the channel actually, but if it was on the third day after this, 50% of the candle will be out of this channel somewhere here. This will be out of the candle somewhere here. So you would expect it to continue to here. Now there will be here. Because we can see that Litecoin is actually bear flagging here. This is a bear flag. This is clearly a bear flag. So coming back here, look, this is interesting now. Now coming back there, and it's good that it's live, so it's not. All right. Cool. Now you can see this sudden dump here and sudden pump, so you know that this is a fake out. Yes, but coming back here will be invalidating the fake out. It means it's actually retesting that region where it faked out. It may as well continue to dump from there until here at 38.79. 38.79 will be below the 0.5 Fibonacci retracement, and from there it may as well come down to $32. Now why am I saying it may as well come down? Because even coming to 38.79 and coming right down here, it has already validated the bear flag and it's on its way to eternal doom. So yeah, so basically that's what we would be expecting to happen with Litecoin here. All right, thanks so much for being here with me on this session. We will try to organize a better time, you know, to do this sessions with everyone, so that people can actually ask the questions that they wonder about. You know, we cannot just go and talk about random things that some people may still not understand or want to know more, or maybe they know already. So we want to tackle what people really want to know, you know. So that's what I think could be best on this sessions, and I think it will really make everything better for all of you. All right, so thanks so much for being here. We will see each other in the next time. For now, I will go and look at this more. Maybe I may call a shot on it. I may short it. So all right, because this daily, the daily candle here, the daily candle closing here on a bullish engulfing, yeah, this right here, this, have you thought about doing it on Sundays? That could be a good idea. That could be, yeah, because I think people are in school now. Yeah, in school, at work. Yeah, that could be a good idea actually. I think I should do it like so. So yeah, that could be great. So I will just ask everyone's opinions and we will find a better time to do this. All right? So thanks so much for watching. We will see each other very soon.